All right, everybody. Welcome to today's Solar Consultant Network's Monday Forum. For those of you that are just joining us for the first time, or maybe you're listening to this recording, you might be thinking, what is the Solar Consultant Network? Well, the Solar Consultant Network is a group of us that form together to help unite the solar industry by really sharing insights and as much knowledge as we can to really help accelerate the adoption of solar worldwide. And part of that sharing insights and knowledge is every Monday we gather here to learn from an expert in the industry to really help us take our game to the next level. So today I'm very excited to introduce our guest. He is on vacation in Hawaii. So I'm very appreciative of him coming on here to share tax knowledge with us. We hear it all the time from people out in the field. What do these tax credit means, and are all of my homeowners eligible? And there's so many questions around taxes. So we've brought on Brady today because Brady Slack in the industry is so well known for his amazing contributions to the solar industry and the tax industry. He trains on all levels, door to door. People use him, every roofing companies, all sorts of companies have really found the value in what Brady has to offer. And what I found is when I've watched people go through some of Brady's training is their skill set of selling goes next level because they're able to sound just a lot more, frankly, to be intelligent to say about taxes and stuff. So it really comes across. It's an opportunity for you to set yourself apart from the competition. So Brady, thank you so much for taking time out of your vacation to be here with us. Can you hear us all loud and clear, or is the ocean waves too much in the background?
Oh, you know what? We had to go get some shaved ice before nap time. So kids are running around on the grass. So if you hear a hello here in a minute, I apologize. No, we're doing good though. Thank you for having me, Melissa.
That's great. Well, thank you so much. So I always like to start off with a couple kinds of questions. So Brady, how did you decide to link the solar skill set and your tax skill set together? How did that marriage of blends happen there?
Well, I kind of got tripped and pushed into it, if you want to be honest with you. I started my tax and accounting career out working for a firm in Utah that specialized in kind of the door-to-door arena, if you will. So I was introduced early on to a lot of high-level door-to-door executives, Graham Wood Fluent, a lot of VPs with Vivint, now Vivint Solar. And what kind of evolved into just helping them with their taxes and their accounting turned into hey, solar's really kicking off. We have lots of questions about the tax credit. Can you help? And so I was almost more or less forced into a position where my accounting and tax clients would come to me and they would start asking me questions about the tax credit. And I would have to say, look, I'm not exactly positive. Let me go back and do some research. And then I just kind of got into the whole rabbit hole of the application of the tax credits, the logistics of the tax credits, the applicabilities of the tax credits, the interpretations of the law behind the tax credits. And so I dove into it, and that's how I really started to become familiar with the solar tax credits.
That's great. Thank you so much. And then how about this one? What are you most passionate about in the solar industry right now?
Well, what I'm most passionate about, I think, is just the growth, and we'll get into it just a little bit because obviously part of what we're going to talk about today is in the Inflation Reduction Act with them extending the tax credit. And I'll give my personal thoughts on that extension as well. But I think, both sides of the aisle, no matter what political preferences you have, both sides of the aisle do have strong initiatives to try and become more green or energy efficient. And solar plays a big part in that. So I am excited to see what the solar industry can do. I think there are a lot of steps that the solar industry has to take to get there from a compliance standpoint, just in my personal opinion. But I do think that there is only a lot of upside in the solar industry, that's for sure.
I agree. Well, thank you again for coming on here to help us learn today a little bit more about what does this new legislation mean for us as solar reps. What I would like to do here is I'm going to turn the mic over to you. And if everybody could please hold off on your questions. I know a lot of times people like to, jump forward and ask questions in the chat bar, but if everybody kind of could hold off, we'll let Brady start talking about taxes and fun things like that to us. Yeah, I never thought I'd say those words, taxes and fun things, but it is part of financing, especially when we're helping homeowners make an educated decision on, is solar going to show an ROI for them? So everybody hold off your questions. And Brady, I'm going to turn the mic over to you, my friend. Thanks.
Awesome. I appreciate it, Melissa. Thank you. First off, again, like I said, Melissa, thanks for having me on. I know I just kind of did a quick glance at those maybe who are in the Zoom with us. I know there are a couple of you guys who I've spoken to before. I see Leonid in here. I've spoken with him before. Oh, sorry, my camera feed just switched, so I wanted to make sure that I could see what was going on. But I've spoken with a couple of you guys in here before. So what I would like to do at this point is just, again, give a brief kind of introduction for myself. Go a little bit more in depth as to what I'm doing, and then we'll kind of dive into the Inflation Reduction Act, because that's what Melissa had asked that I talk a little bit about. Again, my 2-year-old's going to be next to me for a minute, so I apologize. This is what you guys get for being on vacation. Work hard enough, and then you guys can enjoy doing what you do wherever you want to do it. So I like it. Like I said before, I kind of got tripped and pushed into the whole solar tax credit ordeal. I'm the owner of High Country Finance. High Country Finance is a full-service tax and accounting firm based out of Utah. And we specialize in tax advisory and CFO advisory services, just because we feel like that's where businesses can really grow, and that's where a lot of tax savings takes place. I got tripped and pushed into solar credits, and how it actually happened was about 4 years ago, 3.5 years ago. Someone brought some documents to my office. They put them on my desk and they said, "Hey, can you do this?" And the documents that I'm referring to were a couple ruling letters from the IRS, a couple CPA technical letters that had been drafted, not by the IRS, but some other accountants. And so I was more or less forced to do a little bit of research, kind of get into the nitty-gritty of Internal Revenue Code Section 25D and Section 48, which highlights the residential and the investment tax credit sections. I was forced to understand depreciation schedules. Because I wanted to make sure that I understood the application of what these individuals were asking me. And it was a lot about depreciating residential energy systems. And that's where I really got into my understanding of how the tax credits work. So, from an advisory standpoint, I help consult and advise multiple different companies who are both in the solar industry and not in the solar industry. I've worked with tax equity firms who provide investment opportunities and tax shelters through solar projects, really just to make sure that clients and customers alike are compliant when it comes to the tax side of things in the tax law. But what Melissa asked me to talk today about is a lot having to do with the Inflation Reduction Act. Just by a quick raise of hands, because I can see what's going on with the raise of hands, how many of you have actually read into the Inflation Reduction Act or attended training that I've done about the Inflation Reduction Act? Just out of curiosity, if you want to go down and click that little raise your hand button in the settings. Looks like there's really... And Melissa, I'll let you continue to moderate just a little bit to make sure I'm not missing anything, but it looks like there's really only 3 or 4, which is good. Okay, good. We're going to get some new information today. So I'll kind of preface this a little bit by saying last year, there was a bill that was introduced by Congress called the Green New Deal. I'm sure a lot of you guys are somewhat familiar with that bill. It's a highly politicized bill stemming from Ocasio-Cortez. And the Green New Deal was, just as it sounds, a Green New Deal. It was a bill proposed that was supposed to increase the energy efficiency and energy production output of the United States. Unfortunately, again, in my personal opinion, it was highly politicized and it didn't make it very far in the bill to law process. Okay. There was another bill that was set forth last year, proposed, called the Build Back Better bill. And I don't know how many of you guys are familiar with these bills, and that's okay if you're not. I am, because those bills become laws and taxes are based on those laws. So I have to follow up with them if I'm to stay ahead of the curve and make sure that my clients are going to reap the benefits of those laws. So I was following along pretty closely with the Build Back Better bill. Now, also, fortunately or unfortunately, I won't give my opinion on this, it was also highly politicized. And the Build Back Better bill had, it did have some energy incentives in the Build Back Better bill. They'd kind of toned it down from the Green New Deal, mostly because, like I mentioned before, both sides of the aisle have a lot, they're incentivized to increase the energy output of the United States. I just don't think some Republicans wanted it to be as radical as maybe the Green New Deal had presented it. So the Build Back Better bill was presented, but there was lots of facets of that bill that lots of people did not agree with. In fact, on both sides of the aisle, people did not agree with the Build Back Better bill. So it was kind of shelved for the moment. And then earlier this year, they introduced the Inflation Reduction Act. And the Inflation Reduction Act is a toned down version, in my opinion, of the Build Back Better bill, with some bipartisan incentives to help the Republicans vote in favor of the Inflation Reduction Act. As we should all be aware, at this point, the Inflation Reduction Act became law. It was signed into law by President Biden just a month or two ago. And there's some key incentives as it relates to the energy sector in the Inflation Reduction Act. What I'm going to do, Melissa, I have a document, and I'm going to provide the link to Melissa. I do want to apologize because I am on my iPad. I don't have access to share my screen on my iPad. So I'm going to give the link to all of my notes for the Inflation Reduction Act to Melissa. So anyone who wants them can either message me on Instagram or Facebook, really, or you can ask Melissa for that, and I'll give her the link to my notes.
That sounds good. What we'll go ahead and do for everyone watching the recording of this, it will be in the comment section below on the YouTube channel. And then in the Solar Consultant Network Facebook group, when we post the recording of this, we'll go ahead and have all the links to anything that Brady gives us. So thank you, Brady. And again, everyone, Brady is on vacation. So it's all good that you aren't sharing a screen or anything. We're just so appreciative to have you on here. So thank you.
No, you're good. Okay. Anyways, so in the Inflation Reduction Act, there are a couple different sections. Now there's about 720, there is 724 pages. I've read 724 pages of the Inflation Reduction Act. Luckily for me, I had to go to a real estate convention. So my brother drove and I spent the entire 6 hours reading the bill. Okay. So I understand very well what's in the bill. There are still some things, and I'm just going to be completely transparent with you. I've spoken with some peers of mine in the accounting industry, the likes of whom advise Robert Kiyosaki and some really big names in the accounting industry. I won't go any further into that because I'd sound like a complete nerd. But there are some applications to the Inflation Reduction Act that we still don't have. There are still code sections that were released in the Inflation Reduction Act. I'll highlight one specifically that still have not even been released. Okay, so I'm going to give you kind of a very high level overview of what's in the Inflation Reduction Act. I'll try and get into the weeds with whatever questions you guys have as much as I can. But there will be some things where I'm just going to have to say for the moment, I don't have the application answer. I just have the technical answer, and we're going to have to wait until we receive further guidance for the application. Okay. But first things first, with the Inflation Reduction Act, they came right out the gate and they made some changes to corporate tax rates. They included an alternative minimum tax rate for corporations. This doesn't necessarily affect a lot of you individuals, maybe firsthand, but I think it will down the line. An alternative minimum tax is a way essentially for the government to receive some sort of tax from an entity, whether it's an individual or a business, rather than not letting them pay any taxes because of certain loopholes. Again, I'm not necessarily a fan of this because I am a capitalist. I will just say that right from the very beginning. I believe in economy. I believe that the government is fueled by economy, and economy is good for our country. So I don't think that is going to be good in the long run. The second thing, which is located in the Inflation Reduction Act, has to do with the IRS. And I'm sure everyone has heard the IRS has hired 87,000 new agents. They've given millions and millions, if not $1 billion or two, to the IRS. My thoughts on the IRS receiving lots of money is actually a good thing. And I may be a small majority or a small minority in my profession, but it's high time that the IRS receives some funding to be able to increase the efficiency of producing tax returns. I have clients who filed tax returns in 2019s that haven't even been uploaded on the IRS website or posted their accounts. So I actually think it's a really good thing that the IRS has received funding to be able to process, create softwares, create a more efficient communication line with the IRS. And I'm not worried right now. Right now, I'm not worried about 87,000 new agents with the IRS. You have to realize too that the IRS is competing wage-wise with the likes of McDonald's and Arby's and Best Buy. You know, that their minimum wages are at $12 and $15. You have to go deal with angry taxpayers all day. If I were in that position, I'd probably just want to go flip burgers for 6 hours a day, get a free set of fries on my way home, and not have to deal with anyone when I leave, right? That's just my personal opinion. The other thing you have to take into consideration is an IRS agent has to be trained. You know, an IRS agent who is performing audits, they have to be an enrolled agent. Now, for those of you who are not sure what an enrolled agent is an individual who has every designation required to perform on the behalf of a taxpayer in front of the IRS. It's really, they have no differences than a CPA does. And it's a very rigorous test, much like a CPA exam, to become an enrolled agent. So for an individual to just be hired on the spot and start producing audits is extremely unlikely for the IRS. And anyone who is any half decent at what they do in taxes or accounting is probably not going to go work for the IRS. If they do, then good for them, right? But I think down the road, there's also actually been a couple proposals to enforce the fact that individuals on the left side of the aisle have said that the audits will not be for anyone making less than $400,000. Every statistical report says otherwise. So we'll see kind of how that unfolds. But I do think that it is good that the IRS has received lots of funding to provide efficiency increases, because right now they're a nightmare. Logistically, they're a nightmare. After the sections on the IRS, they go straight into some medical increases, medical benefits, a reduction on the price of pharmaceuticals, which again, I didn't really read that far into, if I'm going to be honest with you, because it doesn't necessarily pertain to a lot of my clients. Every report that I have read from my peers or from the AICPA has reported that those reductions are good, but we'll kind of see again how those play out. Now for the good stuff, because I know none of you came to listen about reduction in pricing for pharmaceuticals. Okay, we came to talk about energy efficiencies. After those 3 or 4 sections, they dive right into what would be an increase in the energy efficiency upgrade, okay, for homes. Now, this is really key because when I'm advising solar companies or roofing companies, HVAC companies, a lot of questions that I get are around, can I get a tax credit for upgrading my lights, upgrading my insulation, upgrading my windows or doors? And before, the answer was possibly. Depends on what the solar contract looks like. So it looks like, if I'm going to be completely honest with you, now the answer is a resounding yes. There are certain limitations as far as how much of those credits you're going to be able to receive in a year. However, you are going to get tax credits if you install new doors, exterior doors, if you install new windows, if you install interior lights, if you install new appliances that have an energy efficiency star rating. So for all of your clients who are looking when they go solar to maybe increase the energy efficiency output of their homes, just know that they're also going to be eligible for tax credits for some of those other efficiency upgrades. Okay. Now, if they're, and I'll preface this by saying any longer, or before going on, if any of you guys do have questions about, how can we help our clients make sure that they're claiming all of those benefits? Again, send me a quick message on Instagram or Facebook. I help advise a couple of companies that provide consultory services for homeowners when they're going solar, provide them information on making sure that all the forms are filled out. And I can go over some of those fees with anyone who might be interested as well. Okay. After the home energy efficiency upgrade, they kind of roll into some benefits for low income housing programs. There's lots of programs that are going to be eligible for low income housing, reproductions or restoration projects, and how some of those individuals are going to benefit from energy incentives as well. Not only from a personal investment standpoint, but from an outside investment standpoint. I've already had quite a few individuals contact me requesting information on how they can set up a syndicate or an investment fund to be able to go into low income housing projects or low income regions and invest into that economy through energy products. Okay. After that, and this is kind of the granddaddy of them all, if you will, not going to be the grand finale, but it is a very important piece, are the residential energy and investment tax credit extensions. So typically what the time frame has been in the past is you have been eligible for a 26% tax credit up until the end of this year, 2022. And then rolling into 2023, you'd be eligible for a 22% tax credit. Now, for residential solar systems after 2023, there would be no eligible tax credit. Okay. However, for investment tax credit solar projects, so commercial residential solar systems being used in a trade or business, they would roll back to a 10% tax credit indefinitely. Okay. Now, those verbiages were changed in the Inflation Reduction Act. So right now for solar, anyone who has installed solar since January 1 of 2022 is going to get a 30% tax credit on the cost of their solar systems, okay, from January 1 of 2022. And that is going to remain in place until the end of 2032. At the end of 2032, the tax code is then going to revert back to a step down to 26% and then 22%. Now, after that 22% step down, the residential solar systems, like they were previously written, are going to be eliminated, and there's going to be a reduction in solar systems that are installed for trades or businesses or commercial projects to 6%, not 10%. And that again is indefinitely unless the law changes in that time frame. Okay. Now I mentioned before that I'd kind of give my personal opinion. I think the increase to the solar extension is fantastic. However, I do think that a 10-year time frame is long. 10 years is a long time to give a 30% tax credit. I would love to see that tax credit stay for 30% for 10 years. However, I don't know that it will stay at 30% for 10 years. That's just maybe my prediction, not law. That's just, taxes according to Brady. I think there will probably be some law changes within that 10-year time frame. So I would, if I were selling solar, which I'm not, it's a lucrative business, I should be, but I'm not, I would strike while the iron's hot. That 30% is going to be great incentives for people to want to go solar. But I don't anticipate, especially the way that our political environment is, that 30% tax credit potentially stays for 10 years. Okay. Just again, my prediction, we'll see what happens. I hope I'm wrong, but we'll see. The other thing that, and this is one part of the bill that I referred to earlier about not having been written, no explanations given, besides some articles that I've been able to find that don't have references to any tax code. The sections of the tax code have not even been published, but it has to do with the transferability of the solar tax credit. So some people have been kind of asking me, and one big question that I've always gotten is, hey, I have a retired couple who can't, they don't pay taxes. So how do they get the tax credit? Or, hey, I have an older individual who doesn't pay taxes, or they just get Social Security. Do they qualify for the tax credit? Now, right now, in the Inflation Reduction Act, there is verbiage that states that the solar tax credit, either through Section 48, 48E, 25D, and there's 2 or 3 other code sections as written, allow for the transferability or sale of the tax credit. And that is going to be directly tied to Section 6418, if I'm not mistaken. And that form, 6418, is the form that has not even been published by the IRS. But what Section 6418 allows for an individual to do is they can elect to sell the tax credit to another taxpayer. That would be a key situation for someone who might not have tax liability to then say, hey, instead of getting a $10,000 credit, someone can pay me money, $10,000 for that tax credit, and then they can claim that on their taxes for the benefit of the tax credit on their tax returns, okay? At that point, that would be a huge game changer for the solar industry, because it would allow a lot of individuals to receive that money, put it onto their loan before it amortizes, and not have to worry about the tax implications of the loan. And it would allow a lot of individuals who might want to purchase the tax credits for investment purposes or tax reduction purposes to then take that and be able to use that on their own taxes. Some of the verbiages in Section 6418, as I've read them, state that you have to elect to sell that solar no earlier than 180 days since the bill was enacted. So really, the bill was enacted 2 months ago. A person wouldn't even be able to elect to do this until early next year. And then they can't make the election. I think it's up to 120 days after the tax filing deadline. So there's going to be a brief time period where people are going to be able to do that. I'll have more information as some of that comes out, but that is one piece of this Inflation Reduction Act that I don't know how it is going to apply to homeowners. Okay, but that is something to keep in mind. Lastly, with the Inflation Reduction Act, there's a ton more. We're probably to page 400 right now, so we've got about 350 pages left. But a lot of the jargon just talks about putting money into different government entities, different government organizations. Doesn't necessarily apply to what any of you guys are doing. But the last key is the energy efficiency vehicles and the credits that are available to individuals that want to invest into energy efficient vehicles. Before, companies used to have an allotted amount of credit that they were given that people who bought their vehicles would have access to. They've kind of changed some of those parameters to where if you invest in energy efficient vehicles, you'll have access to those credits. Excuse me. Those credits are going to be subject to income limitations. I believe if you're married filing joint, the income limitation is about 230. I could be wrong. Don't quote me on that. It's in my notes, which I don't have in front of me. And if you're single, I believe it's 140,000. At that point, if you make over that amount of money, you're not going to be eligible for any of the tax credits related to energy efficiency vehicles. And then there's also a lot of energy incentives relating to the manufacturing of energy efficiency products, solar PV, batteries for vehicles, the 9, whatever that would imply. And again, like I said, I have a breakdown of what all of that would be in my notes as well. Doesn't necessarily apply to what you guys are doing individually, but I know that when you guys are selling solar, people ask the questions, what happens if I buy a Tesla? Can I install a battery, and will that battery qualify for the tax credit? Different things like that. The answer is yes, by the way. If they do install a battery, they will be eligible for the tax credit. So just a little tidbit for you there. But other than that, that is kind of the higher level overview of the Inflation Reduction Act. For those of you who are serious about selling solar, that actually do it for your job, I would highly recommend that you don't need to read over the Inflation Reduction Act. There have been a couple really good resources that have been put out. Like I said, as soon as I get a little bit better internet with my computer back at the condo later this afternoon, I'll send a link to Melissa. That way it's available to anyone who would like to read it. Jake Hess actually put together with SolarCon and the Solar Academy, he actually put together a really great breakdown, especially as it relates directly to solar, not with the rest of the jargon that can be found in the Inflation Reduction Act. He posted it in the Facebook group, the Solar Objections. I helped him make some revisions to that as well before he posted it. I think he did a really good job. It does not cover Section 6418, just because I told him that I did not have all the answers for 6418 at the time that he was to publish that. So he did not include anything in his view of 6418, but he's also got a really good kind of description of all of the investment tax credit changes with the Inflation Reduction Act. But I want to leave the rest of the time to whoever has questions to be able to help answer those questions and dive into it if anyone does. And Melissa, I don't know if you want to moderate that.
Yes, I can. Let's see. Andy Smith has his hand up.
Hey, thank you, Melissa. Thank you, Brady. Thank you for being here, and hi to your little one.
Yeah.
What a great way to be living. I have three questions, but I promise they're short-ish. The first question is, the way I've read the Inflation Reduction Act, the way the verbiage looks to be, it says that if you don't make enough money, like the 30% tax credit is no longer related to your ability to pay taxes. So to me, that reads like a rebate rather than a tax credit, which obviously would be a massive game changer for low income communities and things like that. Did I read that right? Or is that still to be written by the IRS?
So as far as I understand it, with the Build Back Better bill, there was verbiage with the inflation, or there was verbiage with the change to the solar tax credit that would make the solar tax credit a refundable tax credit, which would mean that it didn't matter whether you had tax liabilities or not generated throughout the year. That is one change that they did make from the Build Back Better bill to the Inflation Reduction Act. Right now, as I understand it, both Section 48 and Section 25D are non-refundable tax credits. So it doesn't change, at least in my opinion, the tax liability situation of an individual to be able to claim the tax credit.
Okay, thank you. And then related to that, it's always seemed a pretty gray area to me. Do you have a definitive number of years under which they can claim the entire tax credits? If they got a 30 grand tax credit, how many years can they claim that over?
Okay, extremely good question. In Section 25D, and they reinforce this verbiage with the Inflation Reduction Act, it states that you can carry any unused credit into the following year. But in Section 25D, it says nothing more as far as a time frame than that, okay? In Section 48, in Section 48 and Section 48E and Section 48A, there is references to up to 20 years forward and 1 year prior, right? This is where my job does get a little difficult, and I'm going to be completely honest with you as far as how I interpret this based on the applicability of the law and maybe how I would view it or how I would argue with the IRS, okay? Because there is no verbiage that tells me when that credit has to stop in Section 25D, I, as an advisor, arguing with the IRS, would then correlate that with Section 48, same exact tax credit, just for different purposes, and I would tack on the time frame to Section 25D. That is what I have done. That is how I have interpreted it, and that is how I have filed tax returns. That being said, I've never had anyone use more than 4 or 5 years to claim the tax credit. That's how I feel. I feel like my peers are in concurrence with that, so that's what we do. But there is really no cool. There's no guidance that has ever been given by the IRS to that.
Good. I'm glad you said that too, because it's always seemed very great to me. But your interpretation is 20 years forward and 1 year back, which is really.
For an investment tax credit, yes. I've never applied the 1 year prior to a residential system because that is verbiage very specific to Section 48.
Got it. Thank you. Then the last one is, which I think you covered in terms of the code needing to be written, but it is stating there's an additional 10% for American-made equipment. Is there a percentage? Is that still to be defined, or how is that going to work?
That is one question that I do not have the answer to. Very good question. It's not the first time I've been asked that question.
I thought that was just commercial only on that one. But
Yeah,
I'm not a tax accountant.
yeah. Hey, you said taxes were fun, Melissa. Hold on, sorry, give me one sec. I can't have him over here listening to that. I understand the manufacturing question to be that it would be applicable to the investment tax credit specifically for solar systems used in a trade or business. I have also heard interpretations stating that if the manufacturer is making the PV systems, then they would be the ones that would be eligible for that 10% tax credit, that it would not be passed on to the end consumer. I'm just waiting for a little bit more guidance onto the applicability of that question. Very good question. I just don't have the right answer for that right now.
Fantastic. Thank you for your answers. I appreciate it. Have fun.
Yeah, thank you.
Cheers.
Thank you for that. All right, let's see. We'll go ahead and take one more question, and then I got to kind of make sure everybody's time. Linoy?
Yeah, I need to ask a question. Okay, Brady, I just want to ask you if it's correct or not correct explanation that I'm giving to people. So I'm working with the people who are W2, high paid W2 people. And what I say them, and sometimes I'm always do disclaimer, I'm not accountant, I'm not advisor. I just say there is, if it's going to be installed next year in January or February, you can always take the contract. You can go to your HR department, to your finance department, and you can ask them so they will not deduct your taxes. So you don't need to wait for the next April, but you can actually do deduction of the taxes, and they will not, you will get your salary in full without deduction of the federal taxes. Now, is it correct or I'm misleading people?
No. Yeah, you are incorrect. And part of that just has to go with the understanding of how people pay taxes and when they're eligible to claim the tax credit. Because, right, so I would be cautious with that because you are giving tax advice by telling them to decrease or increase their withholdings on an event that could affect them when they file their return. For a residential energy solar system, the system has to be operational before or placed into service before you are eligible to claim the solar credit. Okay. So I would be extremely cautious or wary of telling an individual to stop withholding taxes or decrease their withholdings because they're going to get a credit. I would not do that because, again, that is going to decrease their refund, whereas some of these people are actually probably going to be expecting a refund and then place onto their bill. That would just be my 2 cents.
No, I meant that, no, that's what not I meant. I meant after it's installed. Let's just say the system installed in March or in February. I just say after February, after March.
Regardless though, you're telling an individual to decrease or increase their withholdings. And I would not do that as a solar sales consultant. I would consult with a tax professional before you give that advice.
Okay.
I think that's very important for, we always say this time and time again in the industry. The more that we can say we are not a licensed qualified tax accountant, please consult with yours, the better it is for us to protect ourselves from any sort of, future lawsuits or anything. And yep. I want to be clear that when I bring Brady on like this, that's giving us tax advice, that's not for us to go regurgitate like we are a tax accountant, because we're not. It's a tool really to keep in your tool to help us kind of sound more like we know what's going on. We're now understanding the bill. We're in the jive. Of course, we know what's going on, but we're not legal licensed tax accountants. So please don't give them advice.
Yeah, I would refrain from telling them when to decrease or increase tax withholdings, because you are going to affect their tax return when they file that return and directly affect the refund or amount that they owe. So I would be cautious with that.
Yep. All right. Well, thank you so much, Brady, for taking time out of your vacation to come and give us some tax knowledge and advice. We really appreciate you as always. And again, everybody, you can find these recordings on the Solar Consultant YouTube channel or in our Facebook group. And then Brady, when you're not on vacation and you get those links to that stuff, let me know and I'll go ahead and we'll get those into all of the channels and stuff. So thank you so much.
I'll send them over. I'll send it over later this evening, Melissa. I appreciate that. I know I saw there was just a couple of questions in the chat. I'm going to just stick around for just 2 more minutes and just type out the answers to those in the chat for those of you who asked those. And then we've got to go hit our next speech. But I appreciate you for having me on, Melissa. And for those of you who do have questions, don't hesitate to reach out. Follow me on Instagram, and I'd be happy to help answer some of those questions.
Okay, great. I'll turn off my camera because I've got to get ready for my next meeting, but I'll leave this on if you want to just type in the answers there. And everybody have an amazing day.
Thank you, guys.
Thanks, Melissa.